What's up YouTube? My name is Adam and this is Broke Man Finance. Today we are talking about one of the most undervalued stocks out there that is boasting an over 5% dividend yield. This thing is cheaper than all of its peers and it's also an aristocrat, and I'll explain what that is in a minute. But it always seems to be flying under the radar. As of lately, and we are no different, the stocks and the companies that's been garnering and gathering the most attention has been these sexy kind of hype stocks, especially the EV market right now. It's been crazy with Tesla and Workhorse and Halion. Some people like this stock and some don't, just like the EV companies that I just mentioned. But in all honesty, you can find any stock or any company out there and there's always going to be pros and cons. But today, the undervalued stock I'm talking about is Abbvie. It may not be the sexiest stock because it's not Apple, it's not Facebook, it's not Tesla. But in a few years from now, if you take my advice and you end up picking up some shares, you may not regret it. This past Sunday, Mizuho Securities analyst Vamil Divan reiterated a buy rating on Abbvie, setting a price target of $111, which is more than 28% more than the current share price. The current consensus among 6 tip race analysts is a strong buy rating on Abbvie. The average price out of those analysts is hitting a $111.83 share price. These price targets range from $127 to $105. All would make for some great capital gains if you were to buy in right now at the current share price. But before we get into the rest of the video, if you will, do me a favor, please smash that like button and remember to hit that red subscribe button. If you're a dividend investor, then this one should already be in your portfolio. Not only is it poised to bring you a great dividend for years to come, but it is also teed up for some tremendous growth. Some analysts are giving Abbvie a potential share price of over $400 within the next 5 years. Abbvie is shaking up its own business right now because they have to. They will be losing its patent protection on Humira in 2023. So why does that matter? Well, Humira is the world's best-selling medication, and it's Abbvie's. The problem is, it's such a good selling medication that all these other companies are trying to mimic it so they can get in on that revenue. In recent earnings, they showed a 26 year-over-year revenue growth, including a partial quarter with the newly acquired Allergen. To me, that's very impressive because during that second quarter, we were in full pandemic mode. If you've never heard of Allergen, maybe you've heard of one of their more popular products, Botox. Although Humira will continue to play a big part of their revenue over the next couple of years, they are fully aware of the issue and have more medications ready to pick up the slack. Abbvie having a lot going on would be an understatement. Even news came out today with the FDA giving Abbvie's, a fast track designation and an orphan drug designation for treatment for spinal cord injuries. A fast track designation expedites the review of drugs to treat serious conditions and fill unmet medical needs. An orphan drug designation is to a drug or biologic for the treatment, diagnosis, or prevention of a rare disease or condition. Abbvie received both, and we could talk on the rest of the video on their research on spinal cord injuries, but we'll save that for another day. I can't say these meds, but I can show them to you. The first is Then, finally. Now this isn't a healthcare channel, so I'm not going to go into great detail about what these medications do. You probably don't care. The only thing we need them to do for the company from an investment standpoint, not a health standpoint, is create revenue. This one was up 17% in revenue growth, and this other one was up more than 100% in revenue. There are other medications in the hopper for Abbvie to call on that will soon be earning them a very nice profit. Again, I know you may not care about the medications from an investor standpoint, but I mentioned them, and I think it's important to mention them because a lot of people, when they think Abbvie, they think Humira, but that's not their only product. They have multiple other things going on with all these acquisitions and all these medications going up for FDA approval. If Abbvie was an EV company and they had the most sold car in the world and they were getting ready to release all these other model cars, And to be honest, they already had all these other model cars at the same time, but they're releasing even more. Do you know how much hype would be surrounding this company? AbbVie is inking agreements with different companies such as AbbVie of China. This partnership will help develop and commercialize experimental drugs to treat various cancers. Imagine the success they would have if they could help treat some types of cancer, plus the lives that would be saved in the process. The current dividend yield per Seeking Alpha is 5.41%. That is $1.18 per quarter, making that an annual payout of $4.72. Now, they just had a declaration date of September 11th with an ex-dividend date coming up October 14th with a payout date of November 16th. A member of the S&P Dividend Aristocrats Index, which is comprised of companies which have increased their dividends for at least 25 years consecutively. In AbbVie's case, this dates back to the time as part of Abbott Labs. AbbVie boasts a current dividend yield of 5.41%, like you just saw, much higher than the S&P 500's average of 1.8%. Yet the company's cash payout ratio is only 45.26%. Hence, AbbVie has financial flexibility to fulfill its dividend commitments. To me, having such a low payout ratio for this company makes it very likely that we will continue to see dividend increases year after year. AbbVie has a cash balance of $6 billion with debt of $87 billion at the end of the second quarter. However, the company's robust free cash flows could be leveraged to pay off this debt. In the past 12 months, the company has generated cash flow of close to $14 billion. That's the past 12 months, not lifetime. AbbVie plans on repaying $15 to $18 billion in debt by 2021. So the repayment of the debt doesn't seem to be that concerning for AbbVie's leadership. I think a lot of us see that debt as a red flag for the company, but they don't see it that way. They're seeing that debt as an opportunity to continue to grow this company long term while they keep making acquisition after acquisition. The valuation for AbbVie is low, meaning it's cheap compared to its peers. AbbVie is trading at a forward price to earnings of only 7.3. To put that into context, Johnson & Johnson is at 15.9, Pfizer is at 10.8, and Amgen is at 14.7. Its share price is cheap compared to what they're making. AbbVie did receive some criticism recently, mostly from their own employees though, because AbbVie was asking their employees to return back to work. Even though that made news, it didn't change the way I felt about the company. It doesn't change the fundamentals. Some people looked at it as morally wrong for asking their employees to come back to work during a pandemic. Others felt like it was the right thing to do because they make medications. They're part of the solution. But that's all I have today. Please, again, like the video and subscribe. Let me know what you think in the comments. I'm super bullish on AbbVie. Let me know if you're super bearish on AbbVie. I'd love to hear your thoughts. As always, stay safe out there and take care.